this afternoon's Admirals Hot Topic webinar, where today what we're going to be talking about is, Brexit. 3 months on, okay, just a little over 3 months on from the trade deal that was signed at the end of last year. How has the pound sterling and the euro fared since then? So appreciate all of you joining us here today, whether you're here on Zoom or whether you're joining us on the Admirals YouTube channel. Okay, great to have you here. Okay, if you're finding this particularly useful, then be sure to sort of, to like and subscribe. And if you've got any comments or questions, please be sure to put them into the commentary box there. If you've got thoughts or considerations for possible future topics that you'd like to see us discuss, please be sure to put them in there. We're always really happy and fascinated to see your thoughts. And as I said, we always try to take on board what we can do to help make these webinars as useful and as tangible and as insightful as possible for yourselves. But as I said, today we're going to talk about where we are in terms of the sterling and the euro, sort of 3 to 4 months on from the sort of trade deal that was signed at the end of last year. And we're going to primarily focus on that particular element in terms of actually what do the sterling and euro markets look like. So, although we're going to have a few slides to go through, be sure to stay with us, because what I'm going to do is I'm going to switch across to the live charts, and we'll take a look, at those particular currencies and actually how they are trading against each other, and also on a bigger picture, how they are trading against the other kind of global major FX trading pairs. But as I said, great to have you here. Really fascinating subject. And as always, if you are an active trader of, maybe euro sterling, maybe just the euro pairs or the sterling pairs, it'd be fantastic to hear and see what your own thoughts have been about how those particular currency pairs have traded in 2021. We've also had the kind of overwhelming kind of looming pressure of the COVID pandemic and governmental responses to that, which we're going to touch upon a little bit today. So, it'd be fascinating to hear what your own thoughts and comments have been about sort of trading those particular currency pairs. So, if you just bear with us a second, what we'll do is, we'll have a quick look at getting up the slides for today, and we'll just make sure that we're in a good space to basically to start. Just making sure we've got plenty of good things to talk about. Just bring this up here, okay. And boom, there we go. Okay, so we've got that to go for, and let's bring up our let's get the old Zoom working for us, so I can share with you the screen. I'll go for that, and here we go. Boom, excellent, great. Hope you can still see me. Hope you can hear me and such. So it's a case of that, and hopefully you can see the slides. Okay, if you can, that'd be great. Just pop us in the chat box as always. Just helps us all. And as I said, Brexit 3 months later, how have sterling and the euro fared, and how can we turn this to our advantage? Ultimately we're traders, aren't we? So, regardless of what's going on in the world, regardless of what's going on in the markets, we're looking at, well, is there something that we can take from this that we could help turn to our own particular advantage when we're trading markets? For those of you joining us for the first time, or if you've not joined us for a few months, okay, what you might notice is that Admiral Markets is now Admirals, and as part of Admiral's 20th anniversary celebrations, they are being rebranded from Admiral Markets to Admirals. But that's not really going to make any particular difference to you as a client. You'll still get great instruments and great service from Admirals. It's just you might notice a little bit of difference in the branding that we bring to the sessions. And as it says there, Admirals is, it's a Forex and CFD broker with a wide range of financial instruments available to you, that has a global presence, but also local support. You'll find that they're licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products, and also allowing you to engage with markets using both MT4, MT5, and also the Admirals Supreme Edition, which I can thoroughly recommend to you. If you have any particular questions about Admirals, please get in touch with your account representative, and they'll be very happy to help guide you. So what should we talk about today? Okay, we're going to talk about how the pound sterling and euro economies and price action have fared. All right, there is a wealth of information on the sort of the minutiae of the political and trade details that you can dig out and find and read to your own particular heart's content. Today, I really want to although we'll have a little overview. What I really want to focus in is, what are the currencies doing, okay, and where, if any, are there opportunities for us? Yep, we'll touch upon about how the COVID pandemic affected the relationship between the nations and also the currencies, and what can we expect for the next 3 months? Are they going to be the same, okay, as we've seen for the first 3 months of 2021? Is Q2 going to be the same, or actually are we starting to see a shift? And not, most importantly of all, how can we take advantage of it? That's what we want. And as I said, we've got a few slides to go through here, but then I'm going to be switching across to the live markets. So be sure to stay with us, because that's that's where we'll actually, I appreciate people actually be able to see, what I view and what we see in terms of insight analysis into the actual market. And as I said, if you've got experience of trading both sterling and euro pairs, then by all means, it'd be great to hear what your own views and thoughts have been. Maybe you found it a great trading environment the last few months. Maybe you find it a struggle. It'd be interesting to know what you have. So please, be sure to put that in the chat box. Or if you've got questions and you're here on YouTube, then by all means, give us a like and also put it into the comments box below. We're always pleased to hear your thoughts. So for those of you who don't know me, my name's Paul. Okay, I've traded for many years, traded for hedge funds and high net worth clients. Okay, primarily I like to trade FX indices and commodities, and invariably what I like to be is for longer term positions. I'm a trend trader, and I'm a mean reversion and reversal trader for shorter term trading. I also, because I had pre-pandemic, would split time between both Ireland and the UK. I'm take let's say a very keen interest in the euro sterling pair, which is a good point because we'll be talking a lot about that today. So Brexit 3 months later, all right. So for those of you who've been living in a cave for the last 5 years, on the 23rd of June 2016, the UK voted in a referendum to leave the European Union. We've had 4+, getting towards nearly 5 years of negotiations, shenanigans, political skullduggery, and U-turns. And perhaps, were it not for the COVID crisis, then that kind of the final chapter of the Brexit at the end of last year, the sort of namely the trade deal, would have probably been the major geopolitical event for us to deal with into 2021. But we all appreciate that the COVID pandemic is the number one position. But that's not to say that hasn't had an impact on Brexit. That's not to say that Brexit still doesn't have an impact on markets. And here we are in April 2021, and what we're going to do is we can look back and see what impact that has actually had for us. And as I said, it'd be interesting to know and understand what your own experience has been, and maybe not even as a trading experience. Maybe you yourself, in your work or in your business, you actually have to trade between basically the UK and the European Union. Maybe you've got family across. Maybe you've had retirement plans. It's fascinating to hear what your own insight and what your own particular and personal experience has been in this of 2021. So I don't want to go on too much about the detail, because, as I said, there is a plethora, of a wealth of reference and resources, carried on, all right. But as I said, UK voted to leave on there in 2016. And what we actually saw was, certainly in the UK, we saw the fall of two prime ministers, David Cameron and Theresa May. But actually, also they had two general elections, both in 2017 and 2019, whereby Brexit was the kind of, let's say, the number one sort of debating point. As part of that, we've had internal votes in the UK. Boris Johnson became prime minister, and what happened was the bill was ratified. We left. Brexit actually occurred at the 31st of January 2020, and then there was a transition period, to arrange a trade deal, and that completed on the 31st December 2020 with what we'd probably say a deal. Some might call it a provisional deal, but effectively it was a deal to get across the gain line so that parties could actually move on and actually work, if not together, at least work, focus on what they actually needed to be done for their own particular, let's say, their own particular constituents. As I said, maybe, for those of us, I appreciate, not everybody joining us will be from either the UK or Europe. We have a global audience here at Admirals, and it's a case that, might be understanding, well, what actually changed as of this year? What actually difference did it make? And what, if any, impact was it going to have on people? Well, for people planning to live, work, or retire between the UK and EU, they're no longer automatically allowed to do so. Freedom of movement was closed down. So effectively in the UK, in the UK, I can only speak for the UK numbers, that there would be effectively, there was a net immigration of around about 300,000 people per year, every year for the past, certainly for the last kind of 10, 12 years of the UK being in the European Union. That no longer will apply. Okay, but equally that for effectively UK pensioners who wanted to retire in warm, sunny Mediterranean, that themselves is no longer feasible. Certainly, the UK is going to apply a kind of a point-based immigration system to both EU citizens, but actually all global citizens. That's what it is. It's not necessarily a case of for or against EU citizens. It actually is just going to have a kind of a global points-based immigration system, not too dissimilar to what perhaps Australia and a couple of other countries have. As part of that, the UK will no longer be making such big annual payments towards the EU's budget. So, of course, that means that shortfall, and it was a considerable shortfall because the UK was the second net contributor to that EU budget. Well, invariably, that budget is now going to have to be made up by the other countries that are remaining within that. So, every country is going to have to sort of dig in their pockets for that, which will be interesting based upon the fact that most governments' budgets have been severely damaged over the last 12 months due to the response to COVID. And basically businesses trading with the EU or EU into the UK will undoubtedly, to begin with, face more paperwork. But my own personal belief is that, over the next couple of years, I suspect that will become significantly easier because it is in both parties' interest to be able to sort of facilitate easier trade. That's not to say there won't be restrictions. That's not to say that there won't be challenges. That there are always going to be. But I think ultimately, as a nation, especially in a post-COVID world where countries, nation states, trading blocks are going to want to effectively sort of ensure that they're able to sort of have a good, strong economic export market. It's in most nations' interest to be able to sort of to break down those barriers, he says. But I appreciate that I come from a point of being effectively a businessman rather than a politician who loves to stick his fingers in and cause trouble where it doesn't need to be made. So we shall see how that occurs. But what have we seen so far? All right, before we look at some of the kind of currencies and start looking at some of the particular elements of it, well, what have the sticking points that we've seen so far? Well, one of the kind of the sticking points for the trade conversations was effectively fishing rights. Okay, effectively, European Union wanted to be able to continue to fish in UK waters, and a deal was done for that. But what we've seen since then is effectively the EU putting a ban on UK fishermen's haul of shellfish that's no longer allowed to go into European Union ports, and invariably that means that basically the UK is now looking for new global markets, which was part of the deal. There is still actually, an element of the trade deal to be complete, which is the kind of financial services deal, and this does have an impact. Okay, this does have an impact in terms of kind of financial passporting rights, which previously would have allowed London to effectively to complete and to trade and to work financial services throughout other European countries. That is changing. That will and undoubtedly will change a great deal more. And so what we have seen is UK financial institutions opening up. So let's say kind of European Union-based offices, and equally European Union-based financial institutions having to open up their UK offices as they effectively kind of trade and position themselves to be able to make the most of whatever kind of a final financial services deal which will be completed. One of the things we've also seen, certainly in the last couple of weeks, has been issues with Northern Ireland. Okay, in terms of we've seen an element of rioting there. Okay, an element of let's say a little bit of volatility. And what we have seen is kind of both sides being quite happy to blame each other for that. as a personal opinion, having family from that particular part of the world, I think that there is more to it than that. Personally, I think there is always an element in that part of the world that are happy to have a little bit of trouble. And also, if we look across the vast majority of European capitals and cities, and we are seeing, particularly, let's say, violent outbursts, primarily because people have been locked down for a year. All right, if you lock young people down for a year, and then you release them out, they're going to go a little bit mad, and a little bit wild. And I think as I said, I think there's actually there are threads to this, okay, that come together. It's not just one particular element. And also, one of the biggest things, and probably the kind of thing that's had the most impact, okay, it has been COVID and its response to COVID, and that has been not only has that's been a rather there's been financial implications, there's been political implications, and there's just a general sentiment, the implications of that in terms of actually sort of goodwill on both sides, and where that has been diminished, and where that has been particularly absent by its just particularly absent. So, and I think personally, all right, and I speak on a personal level, that is that my own view is that the kind of the COVID response has been the challenge for this kind of last 3 months, and we're going to notice that when we look at the charts in a moment. Okay, certainly in the UK, that has been a bonus for Brexiteers and a kind of a sore point for some of the Remainers, and the reason being is that what we saw was that effectively. The UK acted, let's say, in terms of the kind of vaccine program, was able to act a little bit faster because it doesn't have 27 other nations to basically negotiate with, and was able to effectively sign a deal faster with the producers of vaccines, and to start a vaccine program rollout earlier. Not only has it been earlier, but it was effectively it's wider and faster, and of course that has not just implications in terms of the health of the population, but also that has a huge impact on your economy, because it's deemed that the quicker people are vaccinated, the kind of the less risk that is available, and that invariably has an impact of basically allowing your economy to open faster. If your economy allows to open faster, well, then invariably you can start to put things right after a year of furlough, what we have in the UK, various different programs around the world. So that was seen as a particularly a bonus point for the UK. It would be said that the UK, in terms of its initial response to Brexit, to effectively to COVID, there was effectively, it might be seen in hindsight that it was not the best response. I think it's probably fair to say that no particular nation has particularly covered itself in glory, regardless of what their journalists might say. Pretty much all nations were just trying to deal with what was just a pandemic, and effectively dealing with it the best that they could. But in terms of definitely the kind of the vaccine, in terms of being able to establish it and then effectively create it, produce it, and distribute it, that has helped Brexiteers, feel a bit smug about themselves, and that's not really, that's not really a particularly helpful situation, but equally it's also been a sore point for the kind of the European Union, and it's probably it hasn't shone very nicely on the European Union, and in particular the sort of the new leadership of Ursula von der Leyen hasn't exactly particularly looked well, and AstraZeneca, especially the kind of effectively the UK, which has been filling UK orders first, that basically brought itself a little bit of put itself in the political spotlight, shall we say, and that had an impact on both the AstraZeneca share price, but also on relations between the UK and the European Union, and invariably that has also had a knock-on impact to effectively what we've seen in the currencies, in both the sterling and the euro, which we'll look at in a moment. And as I said, it's been a bit of a political spat between those two, both the UK, European Union, and a couple of the individual nations as well. So Vincenzo says, I wonder when the UK will be reopened. Politicians really love lockdown for some reason. Yes, they do love lockdown, don't they? Part of Vincenzo is because it gives them an opportunity to control the people whilst hiding away. But that's just me being a cynical old so and so. But certainly here in the UK, we started opening a couple of weeks ago. This week we've had the next level of open up. So cafes, hairdressers, and effectively pubs have started to open. And if we consider, well, then effectively, I think it's May 17th will be when effectively the kind of the next level will be open. So there'll be things like hotels, etc., will be open. And then you're looking to sort of June, July, where they're hoping that if it continues in the present sort of trajectory, that invariably the UK will be as fully open as it can be given the circumstances. Now, of course, that can change, and of course, and if you look in the media, there's talk about now new strains coming from Africa. There might be different and more dangerous. I think there's lots of interested parties who are kind of interested in the kind of the sort of the fear mongering side of it. I can only speak for the kind of UK element of it, and I think personally the kind of the UK population has grown a little bit tiresome of lockdowns, and certainly with the rollout of the vaccine, where effectively I think pretty much everybody over 50 who wanted or needed the vaccination has already been done, and now they're actually kind of stepping down between the kind of the over 45s, the over 40s, the over 30s. So I think as that happens, well, invariably that gives a little bit of confidence. Okay, even today I went out for a walk and stuff and stopped at a coffee shop, and it's invariably, there's pretty much mostly retired people all sat around enjoying coffee outside, all of them saying they'd all been vaccinated. It's given them all a little bit of boost. They're out spending their money in the local economy, which is probably what we need to see. But on a bigger picture, what we're looking at is, why is that important? Why is this spat important? Well, here we go. Let's start looking at the chart, shall we, ladies and gentlemen? Is because this is why it starts to get important. So what we have here, let's bring up the old drawing tools here. This is a chart, okay? This is the euro against the sterling on the daily chart, okay? So for those of you completely new to trading, completely sort of new to sort of sessions, is that primarily my charts are very simple, okay? So I have green bullish candles, red bearish candles. I have a blue, okay, 20 period moving average, a red 50 period moving average, a green 200 period moving average. I'll have fractals and levels of support and resistance where I see them, okay, and big understandings of big round numbers, and that's what we're looking at. And so if we look back here towards, just move this out of the way a second. If we look back here towards kind of mid-September, okay, September here, okay. Well, actually, what we're looking at is, we were just tickling the soft underbelly of 93, okay, in terms of the euro against the sterling rate. But from then, you can see that invariably what we saw was, we saw price drift down, and then during December, the price was a little bit all over the place, and certainly, I spoke to my own clients and said, really, don't bother trying to trade euro sterling during December. Why? Because December's a funny old month anyway. Secondly, there was constantly sort of, yo-yoing and shenanigans going on as basically both sides were posturing and maneuvering themselves to establish some sort of deal. And that's what we saw towards the end of December. And then we can see when we entered into the start of the year, we were around about 91, okay, into the start of January. But hopefully you can see for yourself what we've actually had for the last few months, all right? We've just literally had, it has just been a fantastic downtrend there, okay? Absolutely fantastic downtrend. I tell new traders that, if you're going to look to trade a trend, a good trend will leap off the charts at you, okay? Don't try and force it. Don't try and push it, because that rarely works. That has been a lovely trend, okay? And just think about what that trend implies, okay? That trend where, price went from the start of the year about down 91 down to around about the lows, around about 85, okay? So 600 pip drop there over 3 months, which is a lot for, it's a good number for euro sterling. That is giving a representation that the euro was weakening, okay, and the sterling was strengthening. Remember that when euro sterling is in a downtrend like that, that means the euro is weakening and the sterling is strengthening. Why is that? Well, I think there's just an element of, there's an element of, it's kind of like a relief, okay, an element of a relief rally, because there was a deal done, because of all the political shenanigans from both parties, okay, about wondering whether there wouldn't be a deal. When there is a deal, there is an element of relief. But primarily, and this would be my view, is that a lot of that was to do with the kind of the vaccine, okay? And the vaccine, both the establishment and the rollout and the distribution of it. And I think, as I said a couple of slides earlier, von der Leyen and the European Union, they didn't exactly cover themselves in glory in the way that they acted, and basically Boris, for all his many faults, was seen to basically be able to effectively ensure that ensure supply of the vaccine and also distribution, and also be ahead of the game in terms of distributing. And so that all leads into a sentiment, okay? And I think a lot of this was a sentiment play more so than particular fundamentals, and that's what we're going to come on to it in a moment. I think this has been the first quarter of the year has been primarily a sentiment play about people having confidence in sterling, because the sooner the vaccine is rolled out, the sooner the economies reopen. And as I say, on the flip side of that, people's confidence in let's say the head of the EU and their management of this was just effectively it dents people's confidence, okay? And that might sound as a little bit a little bit subjective. It might sound as not exactly data driven, but it doesn't really matter where you are in the world. Human beings are human beings, okay? And markets still run on fear, greed, and hope, okay? And and effectively, if what you're seeing there is as I said, that is a pure confidence play, okay? In terms of people were against the euro and pro sterling, and I think that was what we had the sort of during Q1. But you will hopefully also see is that what we've seen over the last week or so, okay, there where we had a little bit of a bounce there, a little bit of bump, and I'm going to come on to that in a little bit in a few slides time. But certainly the story of the Q1 was one of sterling strength and one of euro weakness, which we'll look at again in a moment, okay? And for those of you who know some of the kind of sessions that I've spoken about and some of my own kind of market analysis has been quite clear that as I said, that was just that was a great trend to be shorting, okay, to effectively be long sterling, short euro, okay. And that was and you can see for yourself how that actually particularly played out. Roxana is asking, I would like to ask if the presentation is going to be available later online or sent to our email. What you'll find is a great question, Roxana, and thank you for joining us. What you'll find is this video, okay, is being recorded, and then what will happen is you'll find it, and once it's rendered, is that my wonderful assistant Anna, okay, and the team at Admirals will ensure that it goes out onto the Admirals YouTube channel there, okay, and she'll be putting up a link to that hopefully a little bit later. So if you'd like to watch more of this or like to rewatch it again, you'll be able to find that there. And also what you'll also, as always, be able to find is actually a wealth of other fantastic presentations that you can avail yourself of there. And there you go, as if beautifully set up there, okay. Anna's just put a link to see where you can actually watch this later. So be sure if you want to rewatch it, because I appreciate sometimes you need to watch things a couple of times just for the idea to click or to really understand the concept. You can find that to do there. And as I said, there is a wealth of other useful information on the Admirals YouTube channel, so be sure to avail yourself of that great resource. So where do we go from here? Because, as I said, we're traders. So you're looking at, well, what's the story? How do we make, excuse me, how do we turn this to advantage? We've had a great trend, but is that trend going to continue? Is that trend, is that trend going to reverse? What can we expect for, let's say, for the next quarter, the next 3 months or so? Well, where do we go from here? It's fair to say that the EU is finally getting its vaccine program under control, okay, and it's starting to make progress with it, starting to make a dent into its actual own numbers. And this is starting to shift the balance, okay? Remember what I was saying is, the first quarter of the year, the kind of the sentiment was, pro sterling, anti euro, okay, and it was a pure sentiment play, more so than actually looking at the sort of underlying economic fundamentals. So to help us with that, why don't we take a little look at what some traders might call the big dogs and what they're doing with the pound and the euro. And for that, what we're going to do is we're going to take a look at some of the insight provided by the Commitment of Traders reports. So here's just a little bit insight into the overall kind of the British pound futures. Now, if you're unsure of what the Commitment of Traders report is that, well, it's you'll be very fortunate to find that actually there is a trading spotlight webinar in the Admirals YouTube archive, okay, that covers about trading with the Commitment of Traders, so you can actually understand and find out there. But generally, what actually happens at the Commitment of Traders report is that anybody, any particular institutions or individuals looking to effectively effectively trade, above a particular size. I think it might be 1,000 contracts. Above that, has to report that to the CFTC in Chicago, and that is basically every sort of Friday. That is basically put out as the commitment of traders report, telling you where traders are committed. Part of that is an element of British pound futures, and what is actually, these days it's broken down with a good deal more granularity than it perhaps started off with, but effectively you're still looking at three major, let's call them players. Okay, so you have the commercials, which in this would be the sort of the red line. You've got the large speculators. So effectively, whereas the commercials are there because actually they have they have effectively normally an industrial sort of implication, or effectively a commitment to normally that what would normally be a commodity, but also in this particular case, currencies. Whereas the large speculators are effectively, that they are large financial institutions that are speculating, okay, in that particular market purely for profit. Whereas the commercials, they're normally doing it as as part of a hedging operation for their own particular business activities. And then also you have the kind of small speculators as well. The interesting thing about this is that most people, most people would look at effectively the commercials as being the kind of the big dogs, and in many ways the kind of the smartest money, all right, because effectively they are operating in that particular market as part of their main particular business, so their understanding of that particular, might be in that industry or that commodity or that particular trade block, etc., would be better than anybody else's. And as I said, they're normally doing it to hedge their position, to hedge their normal day-to-day business operations. What is interesting in overall British pound futures, okay, and this is basically for this year, okay. So you have the chart here, and that's just looking at the particular the pound futures, okay. So effectively, it's replicating what you've seen there is actually the pound against the US dollar. But what we can see is that primarily the large speculators were long, okay. They primarily had long positions, okay, in British pound, whereas the commercials were predominantly short, okay. They're effectively looking to hedge and cover their positions, okay. If they're short, as I said, it's because it's because they're hedging positions. They're not there to effectively look to speculate for profit. They are there to be the smart money to cover that. Why would they be short? Okay, think about that. If they're looking to hedge the positions, why would they be short? And you also have on the bottom side the small speculators, and the small speculators have been predominantly long, okay, sterling futures as well. So just bear that in mind, because we're going to build this and look at this and pull it all together in a moment. When it comes to the euro speculators, okay, or the euro futures, okay, the kind of the large speculators were predominantly long euro going into the start of the year, but their positions have trimmed, okay, as the year has gone on. And the commercials were short, hedging their euro futures positions, but their positions have been trimmed as well. And the small speculators, they were long euro, but they over the kind of the year have they have trimmed their positions as well. And as I say, just bear that in mind when we switch across to the charts in a particular moment. What we can also see is effectively the euro sterling futures here. Okay, and so we've got, it pulls up a kind of a euro sterling chart, but also showing the positioning some of the big dogs. And this is where we start to get a little bit interested. Namely, the large speculators were long the euro sterling, okay? They're long the euro sterling. Now, and here's the thing is, very often, all right, very often, people naturally assume that the large financial institutions are the smart money, okay? But actually, that is not always the case. That is not always the case. As I said, it's what you'll find is a lot of people will do with the cot trade is actually sort of do the opposite of what the large speculators are doing, and also take a nudge and an insight in terms of what the kind of the commercials are doing, the real effective smart money. And when it comes to euro sterling futures, what we've seen is the commercials, okay, they've been predominantly short, okay, they've been predominantly short euro sterling, whereas the large speculators have been long euro sterling. And as we saw the chart earlier, this year, well, actually, what's happened is we've seen euro sterling tumble in price, okay, which is effectively what we've seen in the commercials. As I said, they're not there to effectively look to make profit. But in this particular case, that they will have done just because of the nature of what's happened with euro sterling, because it has been more of a sentiment play than a fundamental play. And just to back that up, some of you may be aware, that I love to sort of buy strength and weakness within FX markets. Okay, and every weekend I do a little bit of my own analysis to effectively understand what's the difference, where's the strength and where's the weakness, and I spend a couple of hours each weekend just to do that as part of my own particular trading review. And what you can see here is just very quickly is a snapshot from my own analysis. Okay, so this would have been for the start of this week, the 12th of April, going back for week 1 of the year, okay, from the 4th of January. And if we look here, the top two, okay, we've got the pound, okay, and against the euro, but also against those those top 8 major FX pairs. And what we can see here is, hopefully you can see from, really for this whole of Q1, you can see sterling there has been predominantly for kind of 95% of the time has been in the top 3, and in particular in the top 1 or 2. Okay, it has been strongest currency. Remember what we want to be doing: we want to be buying strength, selling weakness. Whereas the euro, okay, out of 8, okay, it's effectively, whilst it started the year quite strongly, has been always down, drifting down towards 5th or 6th out of 8. Okay, it's been towards the bottom end of the matrix. What we saw is, we had US dollar was very weak, okay, for the first 6 weeks of the year. The Japanese yen, okay, has been very weak. And actually what we had was condols in terms of the Aussie and the Kiwi started the year very strongly and have drifted away, okay, as the year has gone on. But that is just, that's my own analysis, okay? And this is, as I say, part of my own thing. So, I can see what the commercial commitment of traders is doing. I can see what the actual charts are doing, and also my own analysis, what I call my FX stand, looking to identify strength, trend, and momentum. All that's doing is confirming me that for the last quarter, sterling has been strong, euro has been weak. Okay, and as I said, I'm always looking to trade buy strength, sell weakness, which has basically allowed a great trend to be able to short euro sterling. But that's changing, ladies and gentlemen. So bear with us a couple of minutes, and what we'll do is we'll take a little look, okay, at what how the charts are looking at this particular moment to what we can utilize. So in terms of final thoughts, so far we've seen euro weakness and pound strength for the first quarter of the year. Mostly that is sentiment based on that vaccine rollout. But is that beginning to change? And that's what we're going to look at in a moment. Could we be seeing a reversal of the euro for Q2? Could they? Well, we'll look at when we have a look at the charts in a moment. So we're going to look at the charts, but just to conclude the slides, okay, this Brexit experience has been running for nearly 5 years. Most people were bored of it, okay, and they just wanted to get on with their lives, however it played out. Whilst the UK has left the EU, there are still elements of the trade and particular finance deal to be sorted, and that will happen over the next couple of years. 3 months after the trade deal, we've seen a wonderful downtrend in euro sterling, which provided with some great trading opportunities. The COVID response and the vaccine rollout, they skewed the market because they made it a sentiment play rather than the fundamentals. And that meant we saw euro weakness and sterling strength. But that might be about to change in Q2 of 2021. And this is going to provide us good opportunity for swing trades for the next couple of months. So why don't we take a little look at the live markets to see what those are telling us. But before we switch across, don't forget to join us next time. Come along Friday, okay, to join my colleague Jens to understand how and why to invest in blue chip companies, including what is a blue chip company, what are the characteristics of a blue chip, how to trade blue chip companies, and high dividend yield blue chips. Jens' top 3 picks. So that'll be this Friday, 16th of April, 2 o'clock London time. Check your inbox for the webinar link, or go onto the Admirals website and be able to sign up and register for this session and the future Admirals webinars. So, as I said, if you just bear with us a moment, what we'll do is we'll switch across and have a look at the live market and see what those are actually telling us, ladies and gentlemen, because invariably that's how we look at turning an idea into a trade plan for ourselves. And as always, if you want to get in touch with us, then invariably you can do so. You can email global@admiralmarkets.com, youtube.com/Admiral Markets, where this video and many of the others will be on there for you, and also facebook.com/Admiral Markets Global. So just bear with us a moment, and we'll switch across to the charting platform and have a little look at the actual sort of 2 particular currencies that we are interested in. So Here we go. I'm hoping that you can see me, hoping that you can still hear me, hoping that you can see the charts as well. That's always a bonus. So why don't we? What we're looking at here is this is Admirals. Okay. MetaTrader 4 platform. Okay, this is I have set up a euro profile here. I have profiles for each of the major FX currencies. If you want to know more about that, you'll find details on that just on the Admiral Markets, so the Admirals YouTube channel, which you'll see on there. So be sure to avail yourself of that. But this is effectively it's a euro profile. So I have effectively euro dollar, euro sterling, euro Aussie, euro Canadian dollar, euro yen, euro Swiss franc, euro Kiwi dollar, and also the DAX. DAX being the kind of the European, the major index. So why don't we cut to the chase and go straight to the main chart, which is the euro against the sterling. And this, as I said, this is the weekly chart. Okay, and we've talked a lot about how for the first quarter of this year that was a great trend, wasn't it? Absolutely glorious. Good trends leap off the chart at you. That's what you're looking for. Okay, don't try and fight them. Don't try and force them when there's good trends. Okay, just you want to feel a bit like you're surfing the wave. Okay, and that's what we want to do, and that's what we had here. But look what we saw, just a week before last week. Okay, this is a big bullish key reversal. Okay, key reversal. What does that mean? Okay, it means in this case, price pushed to a new low at the start of that week, but actually it reversed and pushed higher, and it closed higher than the high of the previous candle. It's a complete overwhelm there, a complete overwhelm. So just that when you see that, and as I said, if you want to know more about key reversals, you'll be able to find the webinar in the Admirals YouTube channel. When things like that happen, it's normally indicating that either the trend is over or the trend is coming towards its end, and hopefully you can see that is in itself is it's a really strong bullish candle there, isn't it? So that starts to give me a hint. Okay, is this trend that we've seen for the first 3 months, is that over? Are we now going to start to see a change and in fact see an element of euro strength and sterling weakness? Certainly that that starts to change your idea, change your sentiment. We're looking to just trade price. So what I'd be looking to do is to see can it follow up here? Okay, and when I look at the daily chart on this, as we looked, that's the kind of the major move we had, and what we saw was prices traded all the way through the 20 period moving average, and also traded through the 50. Okay, and it's closed above it, and for the moment it holds above the 50. And for me, so long as it holds above the 50, I think that tends to mean that we get a bit of euro strength and sterling weakness, and maybe that's what we'll see. It might be, if I just bring up the old drawing tool here, okay, it might be that we see a little bit of a move down, okay, and create a nice kind of a higher low before price moves up there. Okay, that wouldn't necessarily be a surprise, but as I say, predominantly if price tends to stay above that 50, I believe that will be bullish for the euro and bearish for the sterling. And then that makes me want to look at, well, okay, how does that play out against the rest of the euro pairs? And what we saw, as I said, in Q1, euro was like 5th or 6th out of 8. It was pretty much weak against everybody again except the Swiss franc and the Japanese yen. Why? Because there was a real risk on mentality, and invariably euro Swiss and euro yen. In fact, it's just the Swiss and the yen were getting absolutely shorted by everybody, as you can see here. This is the weekly. So even though the euro was weak, you can see from this weekly chart for the start of this year, it was still strengthening against the Japanese yen, hitting a bit of a double top there, but generally that uptrend is still in place. Okay, I would still be looking at, and that just supports that element of some euro strength. Interestingly, this is the euro Swiss. Okay, and let's just move these out of the way so I can draw a little bit, and hopefully you can see for yourself that invariably, having broken that kind of sort of neckline there, we've moved up to the 200. Yes, we've had a little bit of a drift down, but that is an indication of some Swiss franc strength, which that's another story we'll touch on later. But for the most part, that has still been this year a case of euro strength, Swiss franc weakness. When we start to get interested is when we look at the against the US dollar. Okay, so hopefully we can see that this is the euro against the US dollar the weekly chart. And we had in the I won't deny a couple of great trades here of shorting the euro against the US dollar. And those of you who have joined my my own reviews in the past will look at I've been quite as a tactical trade. I thought US dollar short was overdone, and we had a great move in trading that. And invariably, what we saw there was euro weakness, dollar strength. But even that, look at that, we traded back down to the 50 period moving average, and we bounced off it, and we put in a morning star formation there. Okay, morning star. If you want to know what a morning star formation is, refer to the Admirals YouTube channel, where you'll find there is a webinar by myself there on how to trade star formations. And now I look at, well, how does price trade back up towards that kind of 120 big round number psychological level, and also that weekly 20 period moving average? If they get above there and holds there, I think that is bullish for euro against the US dollar. So over the next couple of weeks, I'll be saying just watch that, just see how that particularly plays out. So we've seen a switch there: euro against the dollar, euro against the sterling. But interestingly, also what we saw was the euro against the Aussie. Okay, on my own analysis, the Aussie has been very strong. Okay, for the last 6 to 9 months, and you can see for yourself here on the weekly chart, from last year. Okay, you can see it's just literally been. It was one-way traffic. And I say it was because I wonder if this is now changing. So price, at the start of the year, traded its way down. It's been in a lovely downtrend. Hopefully you can see there. And then back in February, we printed here, okay, a bullish key reversal, okay? And just remember, we saw one there on the euro against the sterling, and we printed one 6 weeks or so ago on the euro against the Aussie, okay? And I remember what I was saying is that it's when you get a key reversal, especially on a big chart like a weekly chart, it's normally an indication of the end of the trend, or the end of the trend is coming. And actually what you saw was a couple of weeks after that, price tried to push down again, but it couldn't make it a new low. And now what we had here was a sort of a double bottom there. Hopefully you can see that we had a double bottom, and price has been trading away north from it. And once again, I think if we get above the 20 period moving average, okay, that starts to give me an indication that euro strength and Aussie weakness. And definitely if price comes down, we get above the 50 and the 20, well then invariably I see us heading back up to that kind of 165 level. So it's drifting north. There's going to be an inflection point there, but it's definitely at an indication of Aussie weakness and some euro strength re-emerging. Okay, so as I said, this picture's starting to build a little bit. Okay, and even we've had Canadian dollar, which has been strong over the last few weeks, but here on the weekly chart, hopefully you can see for most of the year it's been a lovely downtrend, a great trend trading shorting the euro against the Canadian dollar. But just over the last couple of weeks, if we go down to the daily chart, it's just, I think that's just changing a bit. You might say, some traders might say, well, actually, Paul, you've printed an inverse head and shoulders there. Price on the daily is above the 20 is turning. And I'd be saying, get above that kind of 150 big round number, and also that sort of daily 50 period moving average. That I think starts to become a very strong point for effectively another indicator of euro strength returning to the market. So hopefully that gives you a little bit of an indication of what we might be seeing is a case of some euro strength coming into the market. We've had euro weakness for the first quarter. Could we now be seeing signs of euro strength for Q2? And that is what I'd be looking at and adding to my own particular viewpoint in terms of how to kind of enjoy that, and how to sort of be able to sort of trade along that. And we've looked at effectively kind of the euro against the sterling. But if I look at the next big for pound against US dollar, having hit that kind of 140 level, okay, we've been drifting down for the last few weeks, and we're at that 20 period moving average. Could we bounce back up to 140? Yes, we could. But I'm looking to see how does price react here. If it gets beneath that 20, okay, and hold below it, well, then I think we start to move back down towards about 134. So that's an indication of sterling weakness that could be happening there. Look at pound against the Swiss franc. Remember what I was saying was that Swiss franc was weak, okay, at the start of the year, and as I said, that has just been a great trend. Okay, buying sterling, selling Swiss franc. But what did we get here a couple of weeks ago? All right, we've got a big bearish key reversal there. Okay, price pushed to a new high, but rolled over and closed beneath, okay, the low of the previous candle, and also above this kind of 128 level. Okay, it hit 130 in key reverse beneath 128, which had been significant level before, and we're down there. So hopefully you're just starting to get an indication that, that sterling strength that we've seen, okay, might be just beginning to roll out. And even here, pound against the Japanese yen, what has been a great, what was a fantastic trend, okay, for the start of this year, sterling strength, yen weakness. Well, we've got another bearish key reversal there on the weekly chart. Price pushed to new highs, rolled over and closed beneath the low of the previous week's candle. As I said, all of those are kind of elements, all right, of a story coming together about what we're actually particularly looking for, and just maybe gives us a hint of the way that we might see Q2 playing out. So apologize that we're overrun a little bit, but there's always a fascinating subject to talk about. I hope you found that useful. As I said, I'd be looking at an element of euro strength kind of re-emerging in Q2, and we might see with that an element of sterling weakness as well. And so that would be my theme based upon the kind of the weekly price action that I'm seeing at the moment. So, thanks once again for joining. So I hope that's been useful to provide a little bit of insight and giving you a few things you can add to your watch list and take on board and have a look at yourself. As always, if you're joining us here on YouTube, thanks very much for joining the live stream. If you've found this useful, insightful, then please, give us a like. Be sure to subscribe, okay? And if you've got any thoughts or comments, be sure to put them in the box, and we'll always be very happy to answer your questions. So, as always, I wish you the very best of success in your own trading, ladies and gentlemen, and I look forward to speaking to you soon. Trade well, everybody. Cheers.